Hey everybody, it's Daniel here from Inforvest. Hope you're all doing well. So, we got the non-farm payrolls numbers, right? The US government numbers that come out the first Friday of the month, and that comes after ADP, which we did a video. Just check out the channel not so long back, but it was basically the last video. And we discussed how the ADP numbers, the private numbers, came in horrendous, and on the negative side of things, painting a picture of a negative view of the job market. However, it's a number, like I said in the video, it's a number that you shouldn't rely on 100%. And the number to really look at is the non-farm payroll number, right? So which we got. So it came out on Thursday because Friday is a holiday in the US and the markets were closed. Happy 4th of July for any Americans watching this. And so let's go over the non-farm payrolls numbers and just digest about what this means and what came out. So if you see here on my screen, the number came out basically 147,000, right? More than the expectation of 111,000. So that came on to the positive side. The markets took it in a very positive way. We also see that the revised number also came out higher, 144K versus the 139K, right? So it was revised higher, stating that, the previous number that they had, were pushing it a little bit higher because we actually saw there were more jobs than expected. The other big thing here also, the average hourly earnings came in lower, basically also giving optimism in the markets, saying that, hey, you're seeing inflation and wage growth, which links to inflation, is coming down, and you're getting a strong job market. So fantastic. Good news again. When we look at other parts of the numbers that came out, we see the unemployment rate coming out better than expected, 4.1 versus the 4.3%. And yes, you do see the private non-farm payrolls coming in weaker, but overall this whole report is looking strong. Now when we look at the unemployment rate, which is very interesting, the 4.1 versus the expectation of 4.3, you see it really just hovering here. Now you could say, okay, from 2023 we've seen an increase from about 3.4 here, and we've gone up to now about 4.3. This is in terms of unemployment rate, and in terms of, if you look into something called the SOM rule, this would be considered high up there, or quite the change. But when you look at it overall on this chart, it doesn't seem, as from a layman's point of view, doesn't seem much of a big deal, right? Although yes, we did go from 3.4, 3.5 to 4.3, right? But we're just stagnating here, right? We're just stagnating here. If you look at it, since 2024, sitting around the 4% level. Now, what I want to watch out here is see if this number creeps up higher above 4.3, right? Do we start to go north of 5%? But we haven't yet. So those would be some alarming signs. But for now, everything is looking fine under the hood for now, right? The unemployment rate is stagnating. The jobs number came in better than expected. So it's not looking like, for example, Canada's unemployment rate that is just went from, again, very low levels as well, 4%, to now sitting at 7%, and continues to go higher, right? And then you have major cities in Canada like Toronto and Vancouver above the 7% level, right? So we haven't seen that yet in the US data. The US data is showing quite some resilience, which is considered positive for the markets. Now, when we dive deep into this report, we do see here article from Reuters, and if you look into the establishment survey on the BLS website, it does talk about government employment numbers being kind of a big contribution here, right? It rose by 73,000, so employment jobs, and that's being boosted by 40,000 increase in state government education, which economists are basically brushing off because they say that's a seasonal quirk related to the end of the school year. We also see local government education increased by 23,000. A reversal was expected in July also. Federal government jobs lost and continue to see losses, as we know, with the whole Doge thing. And that is around 7,000 positions that were lost in May. Federal government employment is now down 69,000 since January. Again, as you probably, if you're following the news, we've seen that and heard that from the whole Doge thing, right? Private payrolls increased 74,000 jobs. So this was, however, the fewest since October 2024, after advancing 137,000 in May. The rise was below the 3-month average gain of 115,000. So basically telling you the private jobs out there, the private payrolls is suffering while the government jobs are seeing an increase there. We also saw the healthcare sector do quite well and dominate the employment growth as well, adding 39,000 across hospitals, nursing, residential care facilities. Social assistance employment increased by 19,000. Now, the manufacturing jobs saw a shed of 7,000 jobs. Wholesale trade lost 6,600. Professional business services payrolls decreased by 7,000. Retailers, right, added basically 2,400 jobs. Transportation, warehousing payrolls increased 7,500. And construction, 15,000. So when you look at this, everything together, the payrolls number, yes, is looking better than expected. The only thing I would note is, yes, we're seeing the seasonal thing with the whole education thing in terms of the government numbers better. Did see ADP weaker. The only thing I would say is that the problem with the establishment survey is that these jobs and these numbers tend to be double counted. So when you look at the other survey that comes with it, like to look at the household numbers. So when you look at the household numbers, it doesn't really, it doesn't double count those jobs. So when you really look at it, right, the household numbers, look at the civilian labor force. It's been sitting around for months, around 168 to 170K. Right, and actually seen a little bit of a decrease, 130. Now, if you really dive down into the employed, there is a slight increase of 93 that was added. But again, look at it, right? Since many months, and if you actually backtrack this and look at more months, you will see that the jobs are just on standstill. Okay, and this is what I was talking about in my previous ADP video that I did, is that the jobs are on standstill. There's no, yes, the establishment survey is painting a very nice picture, but when you look into the actual hood and see what's going on, it's stagnating in reality. So there might be additions here and there. You might see some sectors doing worse off, shedding jobs and whatnot. But when you look at the overall picture, it's just stagnating, right? So we've seen an increase, and then we're seeing some stagnation for quite some time. What comes after stagnating for some time? Either two things, really, if you think about it. Either we start adding jobs like crazy again, and we see a massive boom, the golden era that Trump was talking about, or we see the reverse, where we start to see declines and further declines, right? And what we've been seeing in the news with Microsoft and Xbox and tech companies out there and AI, they're actually replacing jobs and taking out jobs. And we've been really seeing that the growth data is deteriorating as well. Even though this jobs number and this employment number came out better than expected, we're seeing the trend kind of just stay on standstill here. So if I were to make a bet, is yes, we saw quite the increase after COVID, right? Rates went up. We saw increase in interest rates aggressively, right, in 2022 and onwards. We're cutting rates, but we're in pause mode in the labor numbers here. I suspect going forward that we would start to see some sort of declines here. So when you look at the report, yes, the markets may be cheering and things are looking good and the big beautiful bill is passed and whatnot. But I suspect that in the coming months or a year or so, we'll start to see further declines and deterioration. Although the unemployment rate, like I showed you, right, is sitting around, let me go back to that, right, stagnating here as well, giving you the same picture. We have increased basically 1% from 3.4 to 4.3%, right? But we're stagnating here. And let me tell you something about the unemployment rate. This is the low of the unemployment rate. 3-4%. You'll never see 0% in the number. So this is the low when you look at history. We are at the lows of the unemployment rate. And we have seen quite a steady, slow grind higher, with now it kind of just moving, sideways here. So again, same thing with the unemployment rate, just like I've been saying about the non-farm payrolls report. I suspect some sort of increase to come. When will it come? God knows. I don't know. Maybe one day, maybe a couple months, maybe a year or so forth. So far, the US economy is looking resilient. But when you start to see an increase like this, then it starts to worry you, right? Then you know there's just problems ahead, right? And we're not seeing that yet, but I suspect something to come out when it gets to that point. So overall, not bad report, nothing to cheer about, nothing to cry about. It's just okay. The only thing that you could argue also, or you could say that now that we have more information about the jobs number, is that the prediction or the probability that the markets are pricing in for a rate cut in July has basically diminished even further, right? So there is basically now a 95% chance of no rate cut coming this month, right? September, there's a change there. There's about almost a 70% chance that we will see a rate cut in September. And then October, December, it's a little iffy. Again, data, all depends on data. We might get that second rate cut, maybe not. So if the data continues to be strong and resilient, then guess what? The markets are going to price in no rate cut, no rate cut, no rate cut. Or very few, or very less, or very one and then kind of slow and watch it, right? So what does that tell you also? That tells you that in order to see more rate cuts, inflation has to be down either significantly lower, or the jobs numbers got to be deteriorating, which is what I've been saying, right? The unemployment rate ticking up higher, the non-farm payrolls report getting worse off, and then you could see some sort of further cutting in the jobs number. So anyways, that's my take. That's how I look at things when it comes to the non-farm payrolls report. Let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified in the next video, and I'll see you guys around. Cheers. Bye.